fundsupermart.com.
Can you briefly describe the fund's investment objective and the strategy utilized to create returns?
Right, this fund is really, invested in a mix of various classes of assets, and the emphasis is really on the objective is really on total return by investing in a broad range of assets, primarily fixed income and equities, as well as short-term, some of the short-term fixed income instruments.
As a balanced fund, how do you determine the allocations between equity and fixed income?
Generally we use a top-down asset allocation approach. We consider the various inputs in a macroeconomic environment. For example, we look at economic growth, inflation, and then we also look at, of course, monetary and fiscal policies, liquidity, interest rates directions. And for the various asset classes, we consider their valuation. For instance, for equities, we look at earnings growth and price to earnings multiples for the market. And for fixed income, we look at the valuations of these in terms of the long-term bond yields and the where corporate credits or the rating status of a lot of these, the corporate bond market. Now, against this framework, then we make our decisions with the inputs against an economic framework and valuation. And what we do is really systematically, we try to add value through, in a very systematic and steady way across these asset classes, and hoping to add value to the long-term passive strategy, which is 60% of equities for this fund and 40% fixed income.
Based on your outlook, how is the fund currently positioned for 2013?
The fund is currently marginally underweight equities. We are at 59.5% for equities against its strategic benchmark of 60%. And we are underweight fixed income. We are currently at about 38.5% versus a strategic weight of 40%. So the balance of 2% is in cash, and this is to fund working capital. So I think one of the things that was quite clear to us was in the second half of the year when the earnings forecast or the earnings expectations turned out to be fairly decent, and it became clear that the central banks will continue to commit to a very easing policy with the ECB's OTM policy and the Fed's QE3. It became clear that liquidity would be quite abundant, and therefore we were neutral equities with some tactical positioning. The reason why we were not significantly overweight really is I think we've all recognized that the environment in terms of physical and debt issues for the developed economy still remains very, very challenging. Now, going into this year, obviously we've seen continued liquidity in the market, and we will not rule out taking profit in equities if the market continues to perform above its valuations, market valuations and PE valuations.
The fund delivered a modest return compared to its benchmark. What has been the main detractor of performance for the fund?
The main detractor is really the stock selection in the underlying equities fund. The underlying equities fund in the first half or first quarter of last year was a bit more defensively positioned, as we had come out of a very difficult 2011 environment. But having said that, because of our style, which is much more fundamental, with the sharp recovery, the fund was a bit more defensively positioned. But in the second quarter of 2011, actually the fund held up well because there was there became more nervousness again in Europe, and therefore there was a sell down in the equities market. What is interesting is in the second half of 2012, the fund actually participated in the strong performance in the equities market as it was being repositioned. And at the time, as I've mentioned, it became clear that earnings were not as bad as feared, and also that liquidity would be very much supported and provided for by the central banks in the US and in Europe. So the fund managed to participate quite a bit in the second half of 2012. Having said that, I'd like to highlight that, as I've mentioned, this fund is really on a total return basis. So if you look at the absolute performance of the fund, it delivered about a return of about 13.5% in 2012. And if you look at the ranking and how it stacks up against a lot of the balanced funds, it was ranked 10th out of 76 funds, which is top quartile. And this is in the what we call the European open-ended asset allocation universe. And if you look at the 3-year return, the fund delivered an average of about 3.4% per annum, and was also again top quartile over a 3-year period. I think it was ranked 8th out of 61. Yes.
What kind of investors will this fund be suitable for?
Bearing in mind that the strategic allocation of this fund, asset allocation, is 60% equities and 40% fixed income. Therefore, more than 50% is equities. I think investors who invest in this fund should not be averse to investing in equities, but nevertheless, they are able to participate. Whilst they are able to participate in the upside of equities, 40% of this fund is also invested in fixed income, which will help to mitigate the volatility that one would expect in a pure equity fund. So in summary, I would say that investors should not be averse to investing in equities, can participate in the upside equities market, as well as help mitigate the volatility that one would see in a pure equity fund.